Hey traders, in this short video I will teach you how to trade a double top pattern. First of all, we'll discuss the structure of this pattern, and then I will share with you a great example of a double top pattern that is currently forming on a P&D pair. We'll discuss how to set a stop loss, how to select the entry point, how to select the target. Please don't forget to like this video and subscribe to my trading new page. So first of all, let's start with the basics. Let's discuss what does double top pattern mean. Here is our classic bullish trend. Yes, once we see the market trading in a bullish trend, the price tends to set new high highs and high lows. But at some moment, the market may reach a very strong structure, and approaching that structure, the market may not violate that deep side and set a new high. Instead, the market may set an equal high and retreats. Such a formation is called a double top. It is when the market is approaching a strong structure and sets two equal highs based on that. And also, treating a double top pattern, you should always pay close attention to one very important element, the last high value. Because based on the last high value, you draw a neckline. And when the price completes the double top formation, it should always test the last high level. Yes, setting here a local equal level. From such a perspective, we have a completed double top formation. But of course, be informed that pattern simply signifies indecision and weakness of buyers. But at the same time, traders, remember that monitoring this pattern, what we are looking for a breakout of its neckline to the downside. What we are looking for is a violation, a candle close below the neckline of the pattern. That is our trigger. And only when we close below the neckline, only then we will predict a bearish continuation. Remember that while the market is trading between this strong resistance and this strong support, it may start coiling like that, forming a horizontal range. So remember that breakout here is a very important condition. Once the price breaks the neckline, we always sell the market on a retest. We set a sell limit order on a retest. We set our stop loss above the highs of the pattern, and our take profit is usually the closest major strong structure, right? So measuring risk to reward, you always should have very nice risk to reward for the trade. Yes, here how it looks like. Now let's discuss the example. Analyzing different charts this morning, I spotted a very cute double top on a pound yen pair. Take a look, traders. Here on the pound yen pair, analyzing the price action, you can see that being locally bullish, setting new highs, the market started to coil around that strong resistance. You can see that we got multiple tests of that, and just recently the price formed acute double top formation of that. Yes, you can see that here we got a very strong bullish movement. We retraced, set a high low, then we set an equal high, and we dropped. And at the moment, we see the breakout attempt of the neckline. So the first condition to treat this double top is to patiently wait for a 4-hour candle close below the neckline. Once we see the 4-hour candle close, we will set our sell limit order in a retest. And I set my order based on the lowest candle close within the neckline. So here will be my entry. Then my stop loss will lie above the highs of the pattern. Here will be the stop loss, and my target will be the closest major structure. Here it goes. Also, analyzing the structure, we can see some minor structure support here as well. That structure we will apply for position protection, and once the structure is reached, we will move our stop to entry and make our position risk-free. So here will be our stop loss, our target. Yes, and remember that in order to execute this trade, we should patiently wait for a breakout and the candle close below the neckline first. So, returning back to the structure of the pattern, remember that double top formation is a classic reversal pattern, traders. Yes, it signifies indecision. It signifies while the price is trading above the neckline, it signifies indecision. But once the neckline is broken to the new side, it is the trigger for you that it is time for the market to fall. Let me know in the comment section what pattern do you want to learn in the next video. Also, please like this video and subscribe to my trading